Welcome to the 10-Minute Trading Room, where we take the guesswork out of trading. Hey there, traders. How are you? Thank you so much for joining us in today's 10-Minute Trading Room. If you are here, do me a favor, just say hi in the chat. That'd be awesome. I'd love to see you there and to say hi back to you. I got to tell you, this has been a crazy market right now. So I don't want to delay much longer. Let's get into our market analysis. So if you remember on Friday, which was this red day here, we had FinClub coming in green, and I said, watch for the bounce. And I said, look for it to bounce into the circle. And it did that yesterday, and then kind of wicked out of it a little bit. But look at this monster jump today, up 2% on the market. This right here is the exact reason why before we touch anything as far as any options chain on any stock, on anything, we have to have our market outlook set. Because if we had gone short, we'd have just got wrecked. If we had gone long when the market was being bullish, we would have got wrecked. This is why we've got to have a top-down approach. And by having this top-down approach, it will avoid, hopefully, the whipsaws that you've probably experienced. So this is completely intentional that we're sitting out on the sidelines, letting the market figure out where it's going to go. Because today, while it feels like it's up infinity, it kind of did what I was expecting. But I didn't trade it long because it was counter trend. This is still a bearish trend. The 10-day is still below the 20-day. The blue line is still below the black line on easy terms. Tomorrow, I think the bottom may come out, or maybe Thursday, and we'll be back touching the 50-day average. We do have some people in the chat. Donna says hi. Hi, Donna. How are you? Thank you for joining us all the way from California. I really, really appreciate you saying hi in the chat. It means a lot to me that you can actually join us live and be able to say hi. That means a lot. Thank you. So yeah, but keep in mind that even though it feels like it's up infinity today, we are no different than we were a month ago on the market. A month ago, November 5th, we were at the same levels we were today. And look at all this volatility that's happened since then that we've avoided. So just to recap, we have three kinds of days. We have offensive days where we're looking to be putting on trades. We have defensive days where we are already in the market, but we're not adding to our trades. If anything, we're holding steady or we're taking things off. And then we have transition days. This is another transition day. The reason we're having these transition days is because the market can't decide which way it's going to go. And we're not going to bet anything. We're going to follow the trend. Right now, the trend has not decided which way it's going to go. And because of that, we are holding defensively onto all of our cash. Louise, hey, I saw you come through this morning. Thank you, sir. I've got something special I'm going to put in the mail just for you. Just wait. So yeah, today will be another day of letting the market figure out what it's going to do before we initiate any trades. Completely, utterly strategic that we're waiting. My friend Mark Minervini, as you know, he's only in the market about, over the course of the year, about half the trading days. And I am too. And we are waiting for the opportunities to be as easy as possible to just reach down there and grab our profits. And right now, as Mark would describe it, it is a hard penny environment. And we want an easy dollar environment. So we're going to continue waiting and stocking. But very possibly, maybe by tomorrow, if this trend does continue up and we get our 10 and 20 days crossed back over tomorrow, we might be entering long at the end of the day. But I have a feeling, and maybe you do too, that this is about to be the start of a bear market. And I say that because these kind of moves are not bull market moves. Bull market moves are small. Bull market moves are somewhat. Oh, actually, I did have an example. Bull market moves are somewhat easy to work with. Bear market moves, they're the big up and down and crazy moves. I saw somebody saying the other day on Twitter that the volatility that we're seeing right now is very reminiscent to them of the end of 2018. And at the end of 2018, the market fell 20% over the course of 2 months. And listen, we're ready to go short when it happens. But these big moves in both directions, up 2%, down 2%, these will chop people up. And there are going to be a lot of people wishing that they had just waited and played it conservatively until the trend dictated which way to go. So that's my pontification for the day. We just got to play it cautious. Again, the MMFI, oh, let me make this bigger. The MMFI is coming back. We are seeing some more market breadth, but still, it's only at 40% of the stocks in the S&P 500 are bullish at this point. Only 40%. FinClub, the artificial intelligence data, came through with another green day today, which is promising as well. But if you read the trend of this, it's still really, really down. Like the AI data is not showing to be super bullish over the next few days. So we got to keep it tight. So with that said, as you know, we will only be trading long when we have a full confluence of signals. And right now, still don't have it. But that's strategic. So with that being said, let's go to our final thoughts of the day on another day where we're waiting on the market to tell us what we're going to do. Okay, I thought this was pretty funny. And I thought it was worth sharing. Let me get it to fit right in the screen here. Oh man, I want it bigger. This will work. All right. People overplay numeracy and underplay psychology as factors in trading success. Trading is 95% psychological and only 10% mathematical abilities. Have you found it yet? Trading is 95% psychological and 10% math, which adds to 105%. So I don't know if that was intentional, but when I saw that, I laughed pretty hard. Yeah, obviously that's 105%. But the point is that, in trading, it's 10% of what actually happens in the market, and it's 90% how you play it. And right now, we are playing it exceptionally conservative on purpose. Once the trend is established, we'll definitely be going in it. But right now, while it's chopping around, and even right now, it's giving up its gains. I'm just looking at that. While the trend is trying to figure out which way it's going to go, we're going to hang tight. We're going to wait. We're going to let it tell us which way it's going to go. So, hey, thank you for joining me in today's trading room. Like I say, this is totally strategic. I just want you to understand why we're waiting. Because there will be a point in time where we are very aggressive, but this is not the time. Zach, I appreciate you letting me know that. I'm gonna have to reach out to them. I'll get back to you. I'll shoot you an email after this. But yeah, I appreciate everybody coming on today and having this discussion. We're going to be very aggressive at some point, but today is not the day. We need to wait until the market is telling us which way it's going to go. So thank you for joining us for today's trading room, and we will see you tomorrow. Hopefully tomorrow we can have something to do. But we are going to be conservative, as I said. I will see you tomorrow.